What is up, everybody? That is how I just open up everything now. What is up, everybody? I say it all the time. I'm sure you're tired of me saying it if you watch my videos. But what is up, everybody? It is Ted here with Bodies and Wicks. That's what a candle is. It has a body and a wick. Aren't I clever? Just a little clever one, alright. A little sip here of energy juice. Anyway, I'm doing this quick technical analysis series so I can try to explain to you some TA as fast as I can on probably one particular crypto asset. How I do it though is I do it through smart money theory. Now, smart money theory is a lot of different than retail money theory, or just guessing at it and hoping that this thing's gonna go up today, or hoping it's gonna go not gonna go down tomorrow. Or actually study the price. I study different things. What I don't do, right, is that through smart money theories, I don't do retail. So retail entails trend lines. I know there's no such thing as trend lines in my mind. I mean, there is, but it's for liquidity purposes only. It's to find out where people might be putting their buys at because they're dumb. No, it's not really saying they're dumb. They just don't know. No channels or anything like that. There's no such thing as channels, guys. That's just I don't know. But no geometrical shapes like pennants or triangles or flags or anything like that. No harmonics, and I don't do any indicators. I just go based strictly off of candles and what I've watched smart money theorists do over the past probably six or so months, and I learned from them, and they seem to be right, or else my first couple of months trading, I went through an academy and I thought I was going to be this master trader, and they taught retail theory, and whenever I saw something I thought I could do on my own, I tried doing it, I lost money. The funny thing is I actually won more trades than I lost last year, but I lost more money than I thought I would, and that was probably because the right retail theory didn't really teach me good money management as to where smart money can. Well, for one, I'm just winning more, so I'm not having to worry about losing any money. So, but two, I'm not having to when I do lose, smart money theory teaches you a way to. A good way of money management, I should say, but that's a different story. I have this neither here nor there. Okay, so today what we're doing is we're gonna do a link. We're gonna do chain link, one of my favorites. I love chain link. All right, so let's get to it. That was my little opening for you guys. So if you want to change it, you don't want to listen to my experiences through smart money theory, you don't have to. But if you want to learn something new and you think you can throw away everything that you've ever learned as a retail theory trader, come on, have a listen. I do quite a few of these, and hopefully we'll get through more. So all right, let's go ahead and change it over, and while we're doing that, let's go ahead and I don't know, let's throw on some music. Why not, right? All right, so we're not gonna get to this just yet. I'm very far in. This is what we're gonna get to. I like to show people where we're gonna get to, but first we gotta start from the very beginning. All right, so we gotta go through the months. So Chainlink, I'm not sure exactly when it started, but this is the Coinbase. This is the Coinbase chart. So it started trading on Coinbase in 2018. 2017. I didn't realize Chainlink had been around that long, to be honest, but that's just me. You know what? Let me throw my head off of here That way you guys can see the actual chart. So there we go. All right, so what I did is I'm focusing on what's happening lately. All right, so what's happening lately is this. There we go. Sorry, I'm trying to get it straightened out so where it's in case you have a small monitor, you're looking on your phone, you can tell what's going on. All right, so first, what I'm looking at here is basically for what smart money does is it's an algorithmic theory, right? It's an algorithmic theory that everything's based around an algorithm, and this algorithm, what it does is it basically shows that the price is trying to balance itself. It's always trying to balance itself by seeking liquidity, right? So seeking liquidity, trying to balance itself. And there's different ways you can find that. There's different ways you can tell that. And I'm in these videos, I do the most basic ways of showing you that. I could go a lot deeper into certain things and teach you more different, parts of it, but I can show you the basics, and you can probably take it and run from there and learn some more stuff, or you can also learn from more smart money, teachers as well. Just be careful because some of them really aren't that good. I'm not saying I'm the best, but I think I do a pretty good job, if I say so myself. So here we go. What we have here in this box is what we call a fair value gap. So you have a three candle succession. If you have basically a price void in one of these candles, so you have this wick that's ending here. Let me see if I always have to bring this up, this brush here. So you can see the wicks right here. Show me. You get the wick right there, and then you got this wick right there. All right, so now you have two different wicks. So in between those two wicks, you have the green candle, right? So in between those two is what is called the fair value gap. So what is good about it? What is the meaning of a fair value gap? What it acts as kind of a magnet, I guess you could say, but a repelling magnet. So it acts as balancing for price. So in this case, what we're looking at here is that this drop right here already went through the whole monthly fair value gap. So that tells me that this is balanced. That's usually very rare because I don't know if you remember Bitcoin or not. Bitcoin had a huge gap in it like this forever, and it was when Tesla announced it was going to be putting money into its reserves. That candle grew huge, and it grew huge, and I was like, oh my god, I was like, that's the biggest fair value gap I've ever seen. And I was telling my friends, I said it's gonna come back to that spot, and they're like, no, it's not, it's gonna stay up there. And sure enough, it did. It came back to that spot because these things act as magnets. So I knew there was a fair value gap there. I knew it was gonna at least drop back to that spot. I didn't know when, but I knew it was gonna come back to that spot, and that spot was something like 40-something thousand, 35 to 40,000. So be careful when you see these things. That's what I'm saying. Especially when you see them on a monthly, right? The 15-minute and the hourly, not too bad, because then you can kind of guess and tell how far away you are from it, and what you can do with it. But monthly, if it's something like that with a monthly, you gotta be careful. Okay, so oops, didn't mean to do that. Now, basically, since it's already balanced, usually I always have to do something with all these guys in here, but you don't have to. Not with this one, because it's already balanced. The thing I will point out though is up here is we basically have equal highs. All right, so sometimes you'll get like a big spike, from one candle. Not with link. And this is what I like about link, because that means probably need to draw it out a little bit further. That means that there is liquidity resting above this, right? So like I said, price is always looking for liquidity. So eventually, I think price is going to get above this. This isn't the top, right? This isn't the high for link, and that's why I like this. That's why I like link right now, because I think we're on our way back up to seeing some good prices. What I do want to do is make sure the coordinates are the same, so it's straight. They were straight. Never mind. So eventually, I think price is going to be drawn toward this because of these equal highs, right? And this is just the weekly. So let's go to the daily, right? See, I'm trying to look through here. I don't really see any fair value. Let me see if I can't see any fair value gaps. I don't think there really were in here. If there were small and they got filled and price got balanced pretty quickly. But I don't think there was any fair value gaps during this. No. Okay, so let's go from here to daily. And I keep the regular candles too. I don't do the, you know, what are they called? The Heikenhashi candles. I guess you can if you're, you're what do you call them? A leverage trader. You're trying to figure out, what your momentum is. I just don't like using Heikenhashi candles. I really want to see what candles are doing what. So now that we're at the daily. A lot of people don't even look at the daily, let alone want to try to study it, but that is what you have to do. You have to take every piece apart and find out what's going on. So here we do have a fair value gap at the daily, going back to mid-May, about 10 days ago, 11 days ago. We did have a little bit of a fair value gap in between 36 and 33. So we got about a $3 fair value gap there. Not too bad. Can't complain. On its way down, it didn't really try to make a run up. Usually this one will try to make a run up to it or go inside of it and it'll push itself out. This one didn't try, it just ran down. We'll go on from here because that was pretty much the only thing that was on the daily that was notable. But what you can see is that the prices did get up into these dailies, or these two did get up into the daily fair value gap, and they did get rejected out. So just keep that in mind. As this one did too. This one came down in here, went to the monthly, got all the way down to the bottom of the monthly. It was literally, I forgot what the price. What was the price here? Yeah, 1,500. I think the actual price of that very bottom was like 14,900 and something. So it was really, really close. It didn't ultimately fulfill it, but it got really, really close. So now we're gonna go to 4 hour. And see that there is a 4 hour gap here, or maybe there's not. There's just a weekly. There was a weekly fair value gap. Weekly fair value gap overlapped by a daily fair value gap, and that's pretty much it. Okay, so now I think maybe once we get closer, let me take a look. There are some there, but they're down in here. They're already in the monthly fair value gap. There is another way. I didn't see this one before. I'm seeing it now, so I will go ahead and correct myself and mark this one. All right, so let me get the little magnet part out. Pull it out. Pull it over. As you can see, it's kind of underneath everything as well. So, all right. So, as you can see, when it did come up out of the monthly, it pressed into this 4 hour, pushed it out, I wonder if it did completely push it out. No, it looked like it stayed a little bit inside in, and then continued on. Usually with the fair value gaps, whenever they do go inside and they do get pushed out, it's very quickly. If they run through it, they'll usually run through it really quickly too. Usually fair value gaps don't have candles that'll bob back and forth, in between. Sometimes they do, but if they do, that means that the price is usually balanced, like this and like here that I'm pointing out. I believe this was I don't even know. I forgot to mark it. Or did I? Was this a daily one? Jeez, I feel bad now because I felt like I was really prepared for this one, and now I'm trying to remember where these came from. Yeah, this was a daily fair value gap. So you can see this one from here, these two candles that made that price void right in there, right? After it went in, came back up, right? So it made this daily fair value gap, went down through it, and then after it went down through it, came back up again. So I would say this is all fairly balanced. So that's what that tells me, right? So now that we're in the 4 hour, let's see here. You can see that it's going sideways a little bit and whatnot within that fair value gap, but because this came down in and closed it up. Came down in, closed that up, now it's balanced basically. I left it all the way out because it was still, the algorithm still remembers these fair value gaps. The algorithm will remember everything, from every level. But on the 4 hour, it kind of did the same thing down here too. There's another one right here I just noticed. Of course, there's one right here that I think I've already marked. That's inside of this one right here. So you have another 4 hour fair value gap running along with this one. That is common, or somewhat common, I should say. And where was that one at? Right here. So I'll go ahead and take another box. Actually, where is the about 4 hour one is this one. So I'm gonna take this one, make a copy of it so that way it can stay color coordinated with the other ones. That this is a 4 hour fair value gap. So we get the bottom there, top there, a very small one, very elongated. So let me see if I can't pull it in a little bit to about where we're at right now. Double click it and we'll put some text on it. So FEG 4 hour. Capitalize it. I'm very, very OCD with everything I do, so please excuse me if I am like this sometimes. So, all right, but as you can see, fair value gap, boom. Like I said, they're like magnets. Boom, they repel. So, but goes inside of it, shoots out. But when it does go through it, boom, it just goes straight through it. Same thing on the opposite side. Came back up, touched it, and then decided to move over. And then guess what? Boom, go up. So what that tells me, we're balanced here, right? So we're balanced again. So came up in the daily, right? Came out of the daily, back through this 4 hour fair value gap, pulled again straight down into it. And when it wants to come out, boom, straight out of it. Now this also becomes kind of one of my favorite trading things to do. So if you ever should do a trade, whenever you use your Fibonacci's, right? Well, first what I want to do is I want to get rid of the main one really quick, just so I don't get the other confused. So whenever you do use your Fibonacci's, all right, use these levels, right? Use 61.8, of course, as always. Use 70.5, 79, 88.6. These are the levels that you're going to see price push down to, especially if you notice this formation. And you'll see this a lot. I know all of you guys have seen this a lot. I've seen this a lot. I mean, it happens all the time. And so, but what you'll notice is that these are the levels that it'll usually come to. So what you can usually do is, if you do see something like this, especially if this was to actually break this high, I would definitely be looking to see these come down to one of these levels. So I could put 30% here, 20% here, 10% here, something like that. That way I know, in case it came in, it would catch those, entries, and keep building on that wealth or whatever it is. Or if you're leverage trading, same thing. If you're doing MT4, you could do a 0.5 here, a 0.3 here, a 0.2 here, something like that. That way, whenever it decides to finally come back out, you have a good base of trading underneath you already, and you could probably get rid of your 0.5 by the time it hits 50%, and you've already made quite a bit. So but here, this one pops down, it drops into the 0.62, so perfect area to trade to go long. So right there is a good area to where you can pull the trigger and buy, because it's at the perfect level. So now, even though and this did just break the previous highs here, so you have these highs, these broke these previous highs, this comes back down into here, right? Now it's going to be hard to, this is where the main one comes into play. It's going to be hard to target that main one, the one that you're basing everything off of. Let me scrunch it down just a little bit, because I'm a little confused in here. So this one just dropped, and back it up. All right, now that it's here, actually I should probably lock it. There we go. So now that it's here, you can see that it just dropped below the 50%. So unfortunately, a lot of people wouldn't have bought that because it was at the 50%. A little trick you can do, especially whenever you have a huge 4-hour block that's like that, drop that I need to unlock it. Drop that 4-hour block into just underneath there, and it usually comes to about the 60%, and that's how you can catch those, right? So if you see one of these big moves like this, and this right here, right, it breaks these highs, right? So it breaks the structure, right? Meaning it didn't make a lower low, it made a higher high. So now what we're looking for is a higher low. All right, and now how you can get in on that higher low, or the dip as they call it, is by not worrying about this big long wick. Just use the body of the candle. The volume is where most of the action is going anyway, right? And especially in the algorithm. So if the algorithm is just giving you a wick, and you don't mind the wick, use the volume. And then, of course, it comes back down, right down into the 62. Boom, perfect trading opportunity. There you can get into the trade, and now you're off, right? So that was the little trick I wanted to show you, especially on the larger time frames. Especially in the hours. Hours, it gets a little bit more trickier, but so you can still do it on the hourlies. The thing is, though, is where you want to aim, right, for your exit That's where you're going to actually want to use this. Where you actually want to use your wick is where you want to aim for your exit, right? Entering, yeah, you can get rid of the wick. Now exiting, that's where you want to use your see. So right here, this high, right? You have two double highs right here. I mean, this couldn't be any more perfect for an opportunity to exit around this area. Now, what is around this area? You're 150%. So that's where I would be aiming for if I was to enter at that dip, or at this dip, you know, once it came down to, you know, since we did the other trade opportunity. So 2 trade opportunities that you could have taken advantage of right in there, right? Just by using your Fibonacci tool, and also using, you know, this thing. Both of them were the 62%. None of them came below that, but still, dipping into those, you know, grabbing into those. Now watch it and wait for it. It should come up to about 150%. So we should see chain link get up to at least 45.54, somewhere in that area. We should see chain link at least get up here. I can almost guarantee you that. So let me go ahead and I'm gonna draw a line, horizontal line right there on that 150% line. There we go. Let me do something to it just so it's not like a straight line straight across. Just make it dotted, and let's make it a dark green. That way it's like a target. So put some text on it. That didn't work out very well. And I don't really care for that off to the right, so I'm gonna center it. So that's our target. That's my target, at least, because it's right above this area of liquidity, right? So whenever you see 2 highs just like this, and what price is gonna do, fortunately I don't see any example of it. I don't unfortunately see any example of it down through here, or else I would try to mimic it or show you how it would work. I have in my previous videos, but there are areas where there's 2 highs, you know, either somewhat side by side, or maybe a day or 2 apart, or something like that. And so what that does is that creates a false sense of resistance. So a lot of people are going to be thinking this is the resistance area, right? You see this, you got this high here, you got this high here. They're both about equal. As soon as it comes up, oops, pull that all the way, but as soon as this here pulls up and comes up to that area, right, a couple things could happen, right? So I'm going to give you a couple different scenarios. One is the pullback. So it could actually get near here, right, and start pulling back, right, just as everybody would start believing, because guess what they're going to do? They're going to chase the money. They're going to start selling themselves, and they're going to say, yes, it actually happened. You know, it's selling. It is the resistance. It's selling. And then it's going to find, you know, an area that it wants to turn around at, and then it's going to stop and go right back up the opposite way. Those people who were selling are gonna all of a sudden stop, either try to close their trades if they can, if this thing turns around quick enough, and they may not be able to. They may hold on to it thinking it's still gonna go and turn, you know, and keep going, or they're just gonna exit the trade and start buying, right? Best part about this is once it starts buying, then it usually gets above this area, the liquidity area right here. Now the liquidity area also has people that have buy stops sitting above it. Now, they put a buy stop above it because they think as soon as it gets above that area, it's going to keep running and stay above that area, because now they think this is going to turn into the new support. So they put buy stops above it. They think, if anything, what's going to happen is that it could come back, touch the line as support, and then go on. So then what usually happens is this pulls back even further, right, and goes across that area, and just completely taking it off. Good job, Tyler. All right, go up here, right, get close, pull back a little bit, go up, take the buy stops, get those people thinking that it's going up, and then it turns around, goes through some random area, stops there, and then goes on back up. That's usually the scenario that you see in these situations whenever you have an area like this, right? And it may not come in this exact form. It may come in some kind of odd form, but to where it like kind of hovers right there, and then all of a sudden it'll drop really quickly and then spike up and then spike, and then hover for a little bit, and then slowly come down, and then maybe make a U-turn and come back up. You may see some weird kind of formation like that, but this is the idea of what usually happens in areas like this whenever you have this liquidity that's right next to each other, and this is perfect for that. The one thing you got to look out for here is, you know what, never mind. I was gonna say watch out for the bearish order block, but there is no bearish order block. Oh yeah, there's kind of one. I don't know. Usually a bearish order block consists of, it's usually the last up candle before, the first down candle. But there's no volume on that candle, so you can't really tell. Now, sometimes what people do is they'll put the candles together, or what I could do is actually get in a little bit closer on the time frame to see. So we're at the 4 hour. We can go to the 1 hour now. It will be something like this. You might be able to put those two candles together and say that is an order block, but I don't think so. This right here, perfect example of an order block. Oops. You got this candle here, got some decent volume, and then it's the last candle on the upside, right? And then the next red candle goes down and continues downward. So the bottom of this is what you'd be looking at as what we call the order block. Now, what happens at this area is what's expected is that price will bounce off of it and go down. How far down? Usually about 20 to 30 pips. It could be longer if it's actually looking for a price reversal. But we won't know until we get there. But the way it's looking right now, considering there is higher highs above that, I would expect it to just bounce off of it for about 30, 40 pips and then continue on upward. So don't get too scared if you see it hit this. If anything, maybe get rid of it, sell it at that point, something like that. Maybe not sell it. I don't know if I'd sell it. You could sell it, wait for it to drop back those 20 to 30 pips and then buy back in again. Just depending on how you're feeling, what you think your luck is. I'm giving no advice. I am just here explaining what I have seen happen in the market. And I haven't been trading long. I've only been trading about a year, but I have been in and out of these charts every day ever since I started learning about it in my early years of iMarkets Live, which turned out to be a hunk of trash, to be honest. But I do have a new mentor now, and my mentor is absolutely fabulous, and I couldn't be more happier than I am right now with him teaching me the things that he teaches me, because I have learned so much and I have gained so much. So there's that fair value gap. What I'm going to do is I'm going to put some tests, not fair value gap, that's order block. So let's change the color here. Maybe not orange, maybe a red, since it's going the opposite way. But what we call this is a negative order block, so negative OB. Come on now. Let's make it to the right, and let's make this red as well. Okay, so now we have the red order block already pointed out. So that way, whenever this finally gets through here, now this is probably going to take a while. I know I've talked about what's going to happen up here because I'm confident that chain link is going to get through all of this. I don't think we're going to see much more downward movement to chain link, primarily because everything is balanced. Like I said, it's balanced through here at the top part, it's balanced through here at the bottom part of this area. The only thing that it could do, to be honest, would be just to drop almost straight down until it hits a fair value gap like this in here. And I rarely don't think that would happen. So it'd be hitting like that fair value gap, and I think even if I even got the right one. So here you have a fair value gap, and you also have a positive order block. So you have these two down red candles, but then you have these green candles that overtake them. So since the green candles overtake the red candles, now you have a positive order block, and it's also going straight through that fair value gap. That's the only thing I could think. If it was to be negative, this is where it would be headed. And the only reason why I would think it would even go that way is because, I mean, the institutions got what they wanted. I mean, they got this, right? They definitely accumulated a bunch of longs here. I don't see why they would want to push this further down to try to accumulate more longs. I mean, I do. There's a lot of people that would want to see it go down. That way they could, accumulate more longs before, price takes off, and that way they can make more money along the way. But I just don't see the algorithm doing that. I don't see it doing that because everything is balanced. Everything has been balanced. But like I said, except for this fair value gap that's running through here, hasn't been balanced. But the monthly has been balanced, so that's another reason why I don't think it's going to come back down. So that's why I'm focused on the positive on this one. Oops, I keep grabbing that. Might as well just delete that. Everybody knows it. I keep saying balance, so we're balanced through there. Maybe I'll pull this a little bit over. See if, it looks like we're falling right now. No big deal. It could just pop into this fair value gap, pop right back out. As you can see, it did leave another fair value gap in there for you. So it may just, and it looks like this one popped in the fair value gap, popped out, and this one definitely did, went straight through it, filled the whole gap. So it's definitely balanced. So well, we will see. But I think that is everything I got for you on. Geez, I went way too far over on Chainlink. And hopefully you liked everything that you saw. Hopefully, I taught you something new. If I did teach you something new, and you got something out of this, please go ahead, give me a subscribe, give me a like. That helps me wonders with my channels. I've seen, I've got some new likes lately. I've got some new followers lately due to this, quick technical analysis series. So thank you so much for watching. And again, always remember to keep your pants on.